Joseph Cusick from the Cusick Group, securities offered by MoneyBlock, here to wrap up all of the action from today. As a matter of fact, if you want to go over all of today's segments, you can really dig down deep in some of the names we covered. But right now, we just want to look at the overall market action as it closed today. Starting with the Dow Jones, it's closed down about 0.2% at 19,899. Pretty brisk volume there, but across the board, the weakness was basically buoyed up. As a matter of fact, we saw the markets come off their worst levels. NASDAQ closed up at 54.88, up 0.2%. That's been the silver lining all day. We did see large cap tech, Apple, Google, and so forth to the upside, holding that tech market up. We also saw the S&P 500. It actually started to rally really hard towards the end of the day. Finished the day at 2,269, only down less than, basically right around flatline. It was less than a 0.1%. And action came on mixed volume. You saw in New York a little bit heightened volume at 927 million shares versus average of 900 million. You did see the NASDAQ trade about 1.76 billion versus an average of around 1.78, so right in line there, a little bit lower. You did have decliners outpacing advancers, and you also had new highs outpacing new lows, both on New York and the NASDAQ. So again, some mixed action. So where did we see the relative strength today? That's what we want to focus on at this juncture, and we saw it in gold. Again, we saw the gold miners, the junior miners specifically, up again 8% today, through the roof. GDXJ is the ticker for the ETF that tracks the junior miners. We also saw silver miners. SLIV is the ticker symbol, up 8%. Watch that one very closely. That could come under some pressure, especially if you start to see that the chip sector comes under any pressure. That could put pressure on silver. The gold miners were up. GDX up 5.84%. We also saw social media. One of the tech components up. SOCL is an ETF that you can utilize to kind of track that sector, up 4.9%. Platinum was up today, up 2.76% on the ETF that tracks platinum, PPLT. You also saw some select country ETFs. Hong Kong up 1.86%. We talk about that in the morning. EWH. Singapore was up. EWS up 1.97%. You're seeing some emerging markets like the Middle East and Africa. Take a look at GAF. That was up 3%. Where was the weakness? Well, after we heard from Kohl's and Macy's on their guidance and also their same source sales and the disappointment there, retail. Bricks and mortar and retail in general really started to take it on the chin. XRT is the retail ETF. It was down 2.4%. You also saw with the move that that had happened in the bonds, that started to put pressure on the banking names. Take a look at the regional names. Regional banking names like KRE was the regional banking ETF, and KBE, both down about 1.5% today. There's some pressure there. We're going to keep an eye on that very closely because these are more regionally, domestically centric banks. And we did see that the Russell 2000 was under pressure. We also saw that the IWM was down, speaking of the Russell 2000, about 1.6%. Those small cap, higher beta, domestically centric and domestically economic centric and sensitive stocks were down today, and they were actually leading to the downside. That's something that we really want to keep an eye on if there is going to be any concern about any type of short-term trend shift. We also saw that Russia was continued under pressure. RSX down about 0.4%. And we also saw some activity in the Turkey ETF. TUR down about 0.4%. We're going to be covering all of the international stocks tomorrow morning at 8:30 Eastern Time, where we'll cover Asia, 8:45 where we will Eastern Time, where we'll cover Europe, and then 9:30 a.m. where we will be covering the opening bell here in the United States. So with that being said, an active day, a mixed day here in the United States. But again, we'll keep our eyes on it for you. You come back and join us here at MarketStream.live. All right, folks, have a great evening, and we'll see you tomorrow.